Hello, members, one and all of the Salivation Nation. This is an article that was sent to me by Something Golden, a YouTuber and a viewer here. Appreciate you sending this along. And this comes to us from Russia Today, yes, RT News. And it's always good to check and see what other news outlets are saying and, about certain subjects. And obviously, this is a subject that has been covered on this channel, and especially on Small Gold's channel, about a yuan-backed or a gold-backed yuan. And this article kind of talks more about that, but it is sort of an opinion piece. Well, it is definitely an opinion piece, and it actually doesn't state any really facts, but I think it's interesting that it is coming from Russia Today, and I think it does maybe express some desire that may be to more of a dominance by the BRICS nations. And I do believe there is something, and this is something that we should be paying attention to, whether or not there's any relevance to it or not. Consider this sort of a wish list of what they'd like to do. And it even starts out with the very first sentence. In this article doesn't say it's going to happen. It's just that they're considering starting an internal gold trading platform, according to Russian officials. When this happens, the global economy will be significantly reshaped and the West will lose its dominance, predicts a precious metals expert. In 2016, 24,338 tons of physical gold were traded, which was 43% more than in 2015, according to Claudio Grass of Precious Metals Advisory in Switzerland. I've never heard of him before, but interesting indeed. He says that we have to put the BRICS initiative into a broader context. It is just part of a geopolitical tectonic shift which started decades ago. We have seen a constant outflow of physical gold from the West to the East. At the same time, the West has lost the economic war, and as a consequence, the focus now turns to the financial system. China dominates the world economy and has displaced the U.S. as the world's most formidable economic powerhouse, he told RT. That is sort of a common thought. China their economy certainly is growing in some aspects, but in other ways it's not. You hear about these cities in China that are kind of ghost cities. They're building, there's a lot of construction and there's nobody there. I guess they're predicting that maybe it will grow, but in some ways it doesn't. And of course, obviously, we have a lot of outsourcing to China too. But this thing about the constant outflow of physical gold from the West to the East, yes, the cultures in nations like India and China, culturally especially, gold is much more paramount, much more important. And yes, Russia and China have been amassing a lot more gold, but we, the United States, in our in our reserves, in our system, we've got a lot more gold exponentially than these nations do. And so if they're going to create some new gold standard, they got to keep that in mind. But keep that in mind as I read on here. The creation of a new gold standard by BRICS is also a step to end the U.S. dollar's domination of the global economy. As Beijing and Moscow understand that America used the dollar to control the world, by implementing a new kind of gold standard 2.0, they want to distance themselves from this control. Furthermore, the vast majority of the people in Asia sees gold as superior or real money, something the West has forgotten because of all the paper wealth credit they have accumulated, said Grass. The expert notes that the BRICS countries account for 40% of the world's population and around 23% of the world's domestic product. And so that's something to consider there too. And those numbers don't really fare well. And the thing too is, you got to think about it, is the relationship that the United States has with nations like China and Russia. They're individual, and there's obviously some things there that they have to consider. You're working out trade deals and the like with these nations, and how that's going to come about and have a play on this. And certainly, the United States is going to do its best to probably protect its dollar, but at the same time, you got to be careful. There's so many different factors that come into play. Certainly, printing a bunch of dollars like we've done with quantitative easings 1 through 3, hasn't helped us, and is actually, obviously, that's probably part of what has made some of these other nations so upset. He goes on to say that in combination with the announcement of pricing oil and yuan using a gold-backed futures contract in Shanghai, the establishment of the Asian Infrastructure Investment Bank and New Development Bank, China is setting up an alternative to the post-Bretton Woods establishment. This is certainly a game changer, said Grass. Well, and this has been challenged too. I remember Mike Maloney had mentioned something about this, and because it's pricing of oil and yuan, then that means that it's going to be gold backed as well. Using a, there's not really been much evidence of this. This I think is another peddling kind of what Small Gold is talking about. Show the source for this. We've not been able to see it. No one has ever been able to provide this. Doesn't mean that the desire may not be there. But as I mentioned above in the first sentence, that they're considering it. Well, considering and actually implementing are two different things. But I think it is important to bring this out because it's something that they're desirous of. Physically backed precious metals market spells the end of paper gold trade. The level of trust between BRICS countries can help them establish an intergroup gold trading, which would be 100% physically backed. And this will present a viable challenger that could over time lead to a breakup of the current system, since the West will likely still trade paper gold in the meantime. And yeah, I don't know that that's going to be how how sure they can do that, because they're starting out at a gross disadvantage. Because if you think about it, if they go to a gold-backed system that's 100% physically backed, well, what are we going to do to compete? We'll go to a 100% physically backed system. We'll be way, way ahead of them in that account, because the United States holds a lot more gold, and the collective of nations that are our allies hold a lot more gold than the BRICS nations. So it's going to be interesting to see how this all plays out. Certainly purely speculative, but it's fascinating to see how they're trying to compete here. According to the London Gold Clearinghouse stats for 2016, the total trading volume of the London over-the-counter gold market is estimated to the equivalent of 1.5 million tons of gold. The volume of 100-ounce gold futures in New York COMEX reached 57.5 million contracts during 2016, or 179,000 tons of gold, the analyst notes. And he's saying that the amount of gold mined is much smaller. If we now take into consideration that only 180,000 tons of gold have actually been mined up to today, the scam is just gigantic and obviously unsustainable. The paper scams in London and New York will either blow up when the paper price of gold drops to zero, when a fraction of investors insist upon receiving physical gold in return. Well, and that is there is a problem with the paper market, obviously, with the futures contracts, but hey, they're going to start trading futures for Bitcoin too. Seems like everything has got some futures tied to it, and cashing it out is a totally different matter. But are people really interested in cashing it out? Do they really even care about the precious metal? And I think that's something to take into consideration here with this, and how the paper markets and the derivatives and the like are so grossly outnumber the physical there. Gold prices could explode if trading were backed by physical precious metals. Well, yeah. Setting up a system to actually do so is another thing that you have to consider. And, he talks about that. And then the final battle being gold versus the U.S. dollar. It says the analyst recollected the Heartland theory of Halford Mackinder, a British geostrategist at the beginning of the 20th century who influenced the likes of Kissinger and Brzezinski. Following the theory, we will soon face a war between physical gold and the U.S. dollar. As per my understanding, we are moving into the final phase, a battle between countries, one that will be backed by a hard asset, which is real money, since time immemorials until 1971, and the other one backed by the promise of future generations will pay through debt, inflation, and ever-rising taxation, he said. Getting away from fiat currencies will be good for gold. And Grass concludes by saying that the combination of negative yields, massive political risk around the world, and any attempt to move away from traditional currencies will be positive for gold and will take it to the next level. Investing is very much linked with geopolitics. Once you understand the big picture, it becomes apparent that you should invest in it. So it's quite an interesting article here. It's who knows where the thinking really lies behind the scenes. This is sort of an opinion piece, obviously, and but certainly something to pay attention to and watch what happens at places like the IMF meetings and but take it all for a grain of salt in a sense. We hold the precious metals because we know that they have value and they are undervalued and they've survived the test of time. Speculation as to what will happen with gold in the future, the time will just have to play that out and see. But it is interesting to kind of take a look in and see what the opinion pieces are for things like this. Post your thoughts below. I'd like to extend the multitude of gratitude to you all. And thank you again, Something Golden, for sending this out. Certainly things to keep in perspective. And I'd like to extend the multitude of gratitude to you all for watching and encourage you to please rate, comment, and subscribe.